All right. Good morning. Good morning. So, like we usually do, I want to start with what happened in the overnight hours. Take a look around the world, see which nations were open, what was moving in those nations, which sectors did good, and which ones um, maybe kind of lagged behind. It's very often that the sector that did good the night before will carry through into today's trading. Asia's already closed. It's 12:30 in Europe, but Finance Juice will actually give us a market wrap for Europe. So even though they're not closed yet, you can still get a market wrap. Right now, there's this really big situation going on in the FX market, and it's kind of priming everything up for this gigantic crisis. Uh, we're we're talking, once in a lifetime kind of moves. If they don't get this figured out in the next few days, it's gonna just debilitate markets around the world. So, I've talked about look for something like a ship stuck in the canal, if you guys remember that, when it lasted, a week and screwed up global supply chains. And every morning we're looking for something that stands out, something that won't be just another flash in the pan, but actually sticks around for a while. Pay attention to any articles that are discussing um, Japan's market currency, uh, China's currency, and the EU's currency. Right? Those three are the real big ones to keep your eye on. Another reason that I use Finance Juice in the mornings, it's got a list of the Fed speakers for the day. And I used to go hunting to try to find this list. It was here all along. So you don't necessarily need an account, but if you have an account here, you can use it to filter out some of the aggregate news from perhaps sources that you don't really care, like NPR News. I don't really need NPR News, so I turn that off. They are talking about the Fed in Europe. Let's see, Canada today is expected to raise by 75 basis points, and of course, just like with us, then nobody knows for sure, but that's the prevailing estimate is they're going to raise 75 points, and that'll put Canada at one of the highest rates for emerged markets, domestic versus emerged around the world. Let's see what else we want to hit on. I think that's the main one this morning from Finance Juice. Got a lot of speakers. Bank of England, European Central Bank, and then we've got Barkin. We got the European Union, another speaker going on there. Bank of Canada with that rate decision. Then we got Miser, Brainerd again, and Barr. So full house today with speakers. All right. Throw some levels on here real quick. These levels come from Mish Snyder. She puts out an email every day, and she uses the ETFs, just kind of an aftermarket level. Right now, she's giving a shout out on transportation IYT, looking for it to get back above that 59.50 line on the daily. So I just paused there for a moment. You go back, catch the recording later, take a snapshot of it. All right. So the volume's a little light today, not too much, right? It doesn't stand out as extremely down. We're just down a bit. Right now, we're kind of in line with where we were on Monday. That kind of gets my attention a little bit. It's not too bad. Certainly something you're going to want to keep your eye on this morning. Usually when we see something like that, it's because the market is on pause for a big move, which we're literally getting as I speak. Right. So this is a little bit of a tell, right? You get up in the morning and you think, oh, I'm going to do some trading before I go to work. And you definitely want to look at the volume, right? Kind of take a look around because it's going to give you a heads up. Is there a big move coming? Imagine anybody who was trying to trade long off of this without anticipating that we were about to get a really big punch in the face. They're probably not living the life right now, right? Not very happy about the situation and the outcome. The low volume would have warned you, hey, something's going on, right? The market's waiting for something. And maybe I ought to wait for something before I get in, or at least go try to figure out what it is that they're waiting on. I don't keep that up, by the way. Turn it on, get a look at where we're at volume wise, and then I just turn it off, get it out of the way. All right, the market just fell down to the pivot point called the previous week's low. It is exactly like it sounds. It's last week's low. Managed to break through it. I'm on a 15-minute time frame, so if we were to go into, say, a smaller time frame, you can see that is as far as the market made it with that candle. Now, of course, we've got another one and we're continuing the move. Very likely we're going to end up in a trend line effect. Got an angled trend line. After this last swing high, you're going to want to measure that and plot it to the downside, give you a little bit of a basis for the next swing. Right? Take it like a measured move. If we continue with this swing high, swing low, and we don't begin to build a base, then we're going to want to know, hey, where's the next swing going to end up? And that would be kind of close to our ADR on the day. All right, so for today, just like with any other day, 3 things the market can do. It can hold the line, maintain inside of yesterday's price action, or we can break out of yesterday's price action to the upside, break out to the downside. So far, we've been mostly inside of yesterday's price. We did wick outside just a little bit, but we came right back in. And looking at finance juice, apparently Powell's inflation fighting pledge could set up another 75 basis point interest rate hike. That's what's showing up. It's in bright red. Can't miss it. It's published by the Wall Street Journal. And that would make sense if they're beginning to price in another 75 basis points, right? Well, not another. You had to figure they were already looking at a 50 basis point. So they would just be looking to add 25 more to that, right? Which is why we're not dropping like 100 points. We're only dropping a few points. So there's the alert. Go to countdown to the FOMC. It's their rate hike tool, interest rate tool. So this is the September 21st meeting. We've got like a 75% chance of having a 75 basis point rate hike. This is the one that they're pricing in now. Maybe not. It might be the December 14. They didn't say, right? We'll need a little more clarity to see which one of these they're pushing on. My first gut reaction would be that it's probably the November 2nd that they're beginning to price in a 75 basis point. It wasn't like they hadn't priced in any, right? They probably had already priced in a 50. So now they're just going to bring in another 25 points. Definitely going to bring some shock and awe, but I mean, it shouldn't crash and burn. All right. Anyways, back to. So we did peak outside of yesterday's range slightly last night, came back inside the box. We have half an ADR, 38.71, and a full ADR at 38.36. There's not much expectation that we're going to hold the line. So with that in mind, you really want to start gaming out where's the upside move, right? Where's the downside move and by how far? The ADR alone gives us guidelines on how far we think it's going to go, but doesn't really give us levels to get there. And it's certainly a lot easier to trade from level to level than it is just to mark, some price 35 points away and try to figure out how you're going to reach that goal. So we just crossed through the VWAP. We got that previous week's low at 39.03, pretty close to the roundy. 39 flat has been a significant, major level. If we break that with conviction, close below it on the daily, the rest of the week is going to get pretty nasty. Now we've broken through it like we went through it yesterday, but it wasn't a close on the day, right? We didn't close below 3,900 on the day. So getting below that level is going to be pretty significant. Closing below it is even more significant. But if we get through 3,900, we want to start to focus on yesterday's low. That's 38.86. Now, if you want some pivot points in between this red line way down here and the top of this Globex, there are a few things that you can measure. So this really big candle from the news that just came out, that's something that you can measure. Use like Thinkorswim's quant tool and just measure that one candle alone, all by itself. 50% of that move would be 38.93, and 100% of that move would be very close to yesterday's lows. Like I said before, it always works better when your pivots line up with existing structure and that you don't have some pivot in the middle of nowhere that doesn't make any sense. Plus, the pivots validating each other like that helps confirm to you that you're doing it right. Because if I wasn't doing it right and I had some line that just ended up in the middle of nowhere, it would kind of imply, hey, maybe you missed something somewhere. Go back and look again. Another thing that you could measure if you want smaller levels than this is Fibonacci from that big candle, which would give you a target 38.98, 97.98. So kind of a midpoint between 100 and 50. If you use that quant tool and take it back on the range that we were in before the announcement, when we broke out of that range, it made 100% of that move. None of my hotkeys work anymore. New computer, all my tools don't work. I'm gonna do it that way. 100% of the move, right? So here is the range top, range bottom. We're measuring this range. When we finally broke out of it, there's 50% of the move. There's 100% of the move. Basic measure move 101. Should we begin to get rowdy today and break levels? Kind of makes it easier if you just come out to the daily chart, put that quant tool back on, measure yesterday's candle. $38.69, $38.48, and $38.11 cog line. So those will tie in with the ADR that we already have, right? And it'll fill in some of these holes here in the middle, which gives you levels to the downside to aim for as targets. Just trade from level to level to level. Same thing with the upside move. Suppose we recover from this news that came out, which wasn't that big of a news. Not yet. We've still got more on deck. But suppose we recover from that. We come back up to the daily pivot point at 39.19. We still have to get through our own Globex high, 39.24. Cash open of yesterday, 39.34. Half an ADR, 39.43. $39.63, and then the weekly pivot, and then $39.78. Now, I would argue that you've got a lot of pivots already to focus on. Remember that we're not using Monday's pivots, right? So you don't want to use something like Monday's open or Monday's close or anything like that. You're going to want to reach back to Friday. Friday's close, Friday's high, Friday's low, and Tuesday's open, high, low, close. If we measure all of yesterday's price action, right now we're sitting at the 23%. That's where price is right now. Struggling to get through that 50. We're just adding some levels for an upside move, right? That way, if you're looking for market to begin finally working its way back up, you got destinations to aim for. So once I snap this, it seems like one of the levels that it added that might be a value is 39.70, 39.81, 39.46. All right, we're looking at a 10-day volume profile. Right now we're at the bottom of the box. The entire profile is in the lower portion of the chart. And just within the last 12 hours, we gave away this volume profile point of control from around that 4140 zone. When we're at the bottom of the box, we have every expectation that we're going to go back to the top of the box. When we're at the top, we have the expectation that we're going to go to the bottom of the box. Well, we're at the bottom of the box. 39.82 is the point of control. To get there, we have a significant level of resistance at 39.32. It is also the point of control for the TPO, time price opportunity, this blue profile over here. Now, it's worth pointing out that these profiles right now don't match. The one in blue is volume by time. How many transactions, how much volume was done at this price at that particular amount of time? Another way is to say it is, how much time did we spend at this price target? 39.32. How much time did we spend there? So volume by time versus volume by price. What that ends up providing for a little bit of insight is when you see a significant level of volume, and then you see that we didn't spend very much time there, then it shows that there was a huge liquidity pool there. Say down here at the very bottom, we didn't spend very much time down there at the very bottom. It's a very small amount of time registered on the TPO. And that makes sense, right? Because we dipped down and then we came right back out again. So it's a very, very small amount of time spent. And it would be significant if we seen this very small amount of time. And then also at the same time, we end up seeing a huge amount of volume. That's not showing, but if it was showing, that would be significant. So it would be a big, big green bars and very little blue bars, showing that we landed in a liquidity pool, that we hit an iceberg, or if it's over our head, that we hit a ceiling. It can also help you start to game out where there is likely to be some trap traders. So the main thing right now, we're inside the box and we've got some significant level of resistance at 39.22, and that we're not only inside the box, but we're on the bottom of it. All right. 5-day, 5-minute volume profile. Call it the 5x5. This is often where I would come in when I was newer and hand draw all my pivot points. Call it mapping out the 5x5. If you're hand drawing your pivots, like yesterday's high and low and close, and the weekly high and low and close, you do it on something like Thinkorswim, you can save it all to different layers so that they don't become some crazy sloppy mess that's all over and in your face, right? You can kind of hide those levels until you need them. So we do have an untouched point of control, but it's a long ways away. There's no expectation that we're going to get to that one today. We've already went through yesterday's point of control, so no help there. You could carry forward the value area high, 39.57. I'm not really interested in bringing the value areas forward, but if you were to go and learn and study the volume profile, that's something that they suggest and recommend and teach, is to carry forward yesterday's data into today's price action, including the value area high and low. You do you. All right, we're out here on the daily chart, and we're really kind of focused on that swing high and swing low that we were talking about earlier. Just like with everything else, the measured move applies here, right? So if you happen to get like a 3% move to one side, you're very likely going to get that same 3% move to the other side. It doesn't mean it has to, right? Here's a great example where it didn't. It got shunted and didn't manage to complete the next swing. There's, you're swinging in one direction, you're swinging the other direction. $35.25, 35 and change. That's the next measured move down. Each move, if you're continuing in the trend, should continue to provide lower highs and lower lows until we begin to base. And then we start working our way back up the other side, right? Like back here with these the June lows, and then back here when everything changed in July, and we had all that breath just swoop into the market and rip us to the upside. There was a lot of calls that were coming out saying that was the bottom. That was the bottom, and we're done, and we're rolling over, and we're headed back up. Yeah, but the breadth didn't support that. So now it's all off the table again. Everybody who has said, yep, that was probably the bottom, they're now, a lot of them are retracting that statement and saying, yeah, we have more information now, that's not the bottom. Just play level to level. With everything that's going on in the FX market, really keep your eye on these financials. I can't stress it enough. Any bit of news, anything that you're focusing on, say FX juice or anything like that, pay particular attention to any FX news. US dollar, Canada, Euro dollar, US dollar Japan, US dollar China. Thinkorswim does have a currency map. It's just a widget, right? You go down to the lower left, hit the plus sign, add another widget. It's called FX currency map. So those will, kind of provide, you got to take your pick, but it'll kind of provide some. The dollar is still the most impactful thing moving around. Energy's right behind it. We've been seeing some pretty significant moves in energy in the last few days. These two, or I should say these three as a grouping and as a class, are the most impactful, most important thing that's going on anywhere in the trading world around the world. This strong dollar is hitting nations hard. So one of the things you're going to want to look for is another parabolic move in the dollar like we had yesterday, right? That big blowout move at 8 o'clock when it opened up. We don't want any big sweeping parabolic moves. We don't want to see any exaggerated push. We also don't want to see it crash and burn. The idea behind looking at these, say on a 1 hour where I normally look at them, is that you're really looking for any damaged price action. Price is supposed to be consistent and clean, right? It's not supposed to move in straight lines. It should pull back regularly, reasonably decent sized candles, normalish looking price, right? And normal fits whatever you're looking at. Normal for Tesla, normal for Apple, normal, for SPY, normal for the dollar. New traders won't know what normal looks like because they've never seen it before, right? Or they're not used to seeing it. So you got to spend some time kind of watching it, getting familiar with it, learning to see, hey, how does that dollar move on a day-to-day basis? At the very least, look back over the last 5 days and see what it's been doing over the last 5 days and see, is it doing something now unusually different than those last few days? Any continued move to the upside in the dollar is very likely going to continue to put pressure on the S&P and the NASDAQ. Just lump these together, the NQ, the ES, stocks versus bonds, ZB, ZN. So yesterday, for an example, when we had the marketplace selling off in the S&P and the NASDAQ, we also had the market selling off in the bonds. These are some of the best indicators that you can use right now. There's nothing else out there that's going to provide insight and give you assistance in your trade. Should I take a long off the low? Should I fade the breakout? Is it really breaking out, or is it a fake breakout, fast failure? You'll get more clarity, more insight by looking at what's going on in Forex, the dollar, the bonds. The VIX really hasn't been helpful this year. And that's not changed this week. It's still worthless this week. All right, so the idea is if we see the dollar get above 111, we're very likely going to begin breaking outside of yesterday's price action to the downside in the S&P and the NASDAQ. We want to see the dollar get back inside of yesterday's price and preferably work its way back down below $9 today. If we can do that, we're very likely going to begin revisiting some higher levels in the S&P and the NASDAQ. At the very least, say get back around that 39.40. 39.40, 39.50 area. The same discussion could be had with the VIX, but the VIX is, like I said, it's not been a very useful product this year. We were coming up against that 27 yesterday, and it was a closely watched move. If we see that VIX break above 27 and say on an hourly time frame closes above that 27 line, you're very likely going to see that ripple across the rest of the marketplace. So, use an alert, just right click, set an alert on it, keep your eye on it. VIX above 27, definitely bad for the market, but we're already past the critical level. Like 25, if we were to put a line in the sand, people way smarter than me has it marked out at 25.20. So we'll just use their level. It's not my level. Not taking any credit for it. If we're above 25.20 in the VIX, we're bearish in the S&P and the NASDAQ. We're bearish stocks. We get below 25.20, then we're bullish in the stocks. But it's not just a wick across and then, oh, well, we're going to go long or we're going to go short. We're talking about close on the day. And you could do like close on the hour, if you want some closer in perspective. Daily would be better. As long as we're closing above that 25, we're bearish in stocks. Close below it, we're bullish in stocks. But that 27, it represents a whole nother change event. The idea that we've already been struggling to break through that level, test, test, test. The more times you kick that door, the more likely it is the door is going to open. Plus, think about liquidity. If there is a large pool of liquidity up there, then every time we come back up into that, we're taking more and more and more of that liquidity away. We're eroding that resistance until finally there's no liquidity left up there, and we go right through that level, seeking new liquidity at a higher level. This very much looks like a raid after a draw, right? They draw us in with this tight sideways range, raid the liquidity that's been drawn, and now make the move to the upside, carrying that liquidity up through a new zone. We'll see. This is the issue right now with the yen. It's gone parabolic. And just like anything else, what goes up like that has to come down. So a trade that I'm focused on, it's not ready yet, looking for a tweezer pattern, a 2-bar reversal. We're going to be looking for that thing to roll over and present an equal candle, same size, same shape, same everything. Tweezer pattern, 2-bar reversal, something very similar in that word phrase. After the other candle closes, it'd be a red candle. After that candle closes, that would be the the trigger for a short, and it's only a short duration short. We're not talking about, running this thing back down into the 130s, because I don't see that coming anytime soon. You can trade this by looking at the Japan ETF. And then with Japan or with Europe, we need this thing back to parity. We're very likely not going to get it. What was the other one? US dollar China, which Thinkorswim doesn't do a good job on this. I usually go over to TradingView to look at it. You can bring it up like on a weekly, and then Thinkorswim will let you see it, but that's not too helpful. This thing turned around yesterday in the middle of the day and was the start of the afternoon change. There it is. Nope, that ain't it. Now we're still holding underneath that $7 level. I don't think we're going to test it today. Definitely keep your eye on it. The idea is to see this calm down, stay within the range, say 6976 to 699. Preferably tighten that up, 6988. And we've got a double bottom in TLT. Now, we haven't even begun to signal that we're going to turn that around yet. So keep your eye on the TLT. See if we're going to double bottom IBD style, where we go a little deeper and then flip around and come back up, or if it's going to be a new leg down. Just keep in mind that's a H pattern. H stands for hell for shorts. All right, there's your Japan ETF, EWJ. It's the iShares version. As you can see, we broke critical level. So going to be watching this for, the reversal opportunity. All right, this bullish semiconductors. I got to get off of this log chart. Right now, we're down this morning to around 1225. So we're not yet inside day breakout, but we're working on it. This managed to close off of the lows. Looking for a break below 12 here. A break below 12 would basically be a break of yesterday's range. So we're looking at an inside day breakout, but also a breakout from this reversal hammer candle that failed. 1146, and then 1089. If things really get wild, which I don't expect it to, 98. If you get a chance this morning for a little bit of a rally up, catching some options on that below 13. The OPEX here, September 16, seems to be your most liquid bet. I mean, they're not bad if you come out a little bit more, if you stay on the put side, which means, like no call credit spread, but instead like a put debit. With put debits on that, I would probably build them where I think it's going to go, right? And now look left, build your put debit around that 10.5 area. Energy's down 0.5%. That puts us at 78 to 76. So we're already inside day breakout. We're sitting down here already this morning. What you want to look for with the continuation in energy is at the open, we get that move back up to 78.89. Look for a rejection there. So we're going to be looking for it to open, run up, bump its head on yesterday's low, and then continue to move to the downside. An area of resistance would be the low of September 1st, or the close, excuse me, not the low, the close. 78.6, something like that. $7.85. Now, communications is something that I talked about yesterday. On the weekly time frame, this has a squeeze going on, and the squeeze is projected to break out of the downside. This one and here's XRT. I'd have to go back and check my notes. We're coming into a double bottom. This is only down 0.25% this morning. Puts us right at that roundy, $53 flat. So one of the things you want to look for today is that inside day breakout before the pre-market. At the very least, we're lower than where we closed yesterday. So that's going to be a benchmark for an upside retest. If we're gapped down and we come into the open, we very often try to close the gap. So if we open at 53, look for it to run up, bounce its head on the close yesterday, and then continue that move to the downside. Just keep in mind, this sector, along with a lot of the other sectors, has had a significant move to the downside already. Now, I don't like the phrase or the idea that says, well, we've already gone so far, we're almost due to turn around at this point. Don't approach the market that way. It can stay irrational longer than you can stay solvent. And it doesn't have to turn around just because it's traveled, quote, so far. If you are concerned about how far it's traveled, use something like the distance indicator. which will help you measure how far away from a particular moving average are we. You can find this in the Thinkorswim Discord that I made. So right now we're looking at the 10-week. We're looking at the S&P and asking how far away from the 10-week are we? 3%. When we're negative, how far away from the 10-week do we have to get before we start to turn around on average? Well, let's tighten that up to a 1 year. And we can see that the average is somewhere between 3 and 4. So we're near that spot where it generally starts to pause, build a base, and let that 10 get caught up, or that it reverses and moves back towards the 10. We're in that zone right now. It's certainly gotten worse before. We hit a level of nearly 10% away from the 10 a while back, near those June lows. This one's usually more helpful on short duration and intraday trading. How far away from the 10 on the daily are we? And where's the average reversal? So 3% really seems to be that line in the sand. There's been times where we've gone through that. We hit 4 a few times and we've gone beyond 6. But around 2.5 to 3% seems to be the turnaround spot, or the place where we pause. And we're at 2.64% right now. So we still got some downside move, which yet again proves that we have not traveled, quote, too far, too fast. There is the 5-bar rule. That was 4 red days in a row, 5th bar green. That resets the count. We're only on day 2. Well, we'll be starting day 3 today. The head and shoulders is done. I seen someone talking about that yesterday. It's done. It's over with. It's already exceeded its expected move. It no longer counts or applies, right? So take that head and shoulders out of your analysis. All right, emerging markets is down this morning. This is what we use for a gauge on risk on, risk off around the world. Think of it like global risk parameters. This is an indication of what money is doing around the world, and if they're feeling threatened or not bullish, it tends to get reflected into the EEM. Nine days left before the S&P futures contract needs to be rolled, by the way. So keep your eye on your futures volumes. We got gold this morning up, and TLT, the dollar, another gold, China. Lots of volatility metrics, and the rest are flat. Tesla's down 0.5%. Citigroup, Ford, Bank of America. A lot of those financials this morning are down. When we look at the S&P 100, break it into sectors like just the financials here. 25%, 60%, 30, and then the rest of them are basically flat. Healthcare this morning, LLY, Gilead, and Microsoft for some reason is above the zero line this morning. Still got a whole lot that aren't doing much of anything yet. So we'd have to circle back on those. And that's the idea, right? When you're doing your own morning briefing, you got to realize I'm doing mine early, right? I have to do mine early because I've got other things that I need to do. But you're going to want to come back in and circle back and ask those same questions. We're still really flat out there, even with that move that we saw earlier in the S&P. That's what I got for you guys. Be careful, be safe, watch the news, keep your eye on the dollar. It's going to be your leading indicator.